Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of October 21st through October 25th. We're in part one of our weekly trading game plan. We'll strive to help you make money trading in October of a presidential election year. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for October 21st through October 25th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. You can find a direct link to this Google document in the description box below. Our notes documents contain links to bonus videos, to the tools and resources we use to do our market analysis, come up with our trading strategies, trade ideas for this trading week. We keep all of our notes documents in a publicly accessible Google Drive folder, so you can refer back to the notes from this week, as well as notes from previous weekly trading game plans. And you can find a direct link to that publicly accessible Google Drive folder also in the description box below. Good morning to Ricky Khan. Thank you for joining us. Hope you had a great trading week and are doing well. So first, let's take a look at how the markets ended up on Friday. So we see all the indices pretty much up a slight amount. I believe both the Dow and the S&P hit new all-time highs, intraday all-time highs again. We had 62% advancing, 33% declining. We've got almost 92% at new highs, only 8% at new lows. We've now got almost 70% above their 50-day moving average, only 30% below. Also, almost 70% above their 200-day moving average, only 30% below. So overall, very bullish day. See, it was a rotation coming pretty much back into the Magnificent Seven. So most of the Magnificent Sevens were green. The only weak sectors, some in financials and healthcare, energy. We'll talk about energy, oil, the decline in oil. See some of the news. Housing market picks up. Most expensive parts of the U.S. Oil prices show how numb traders have become to sanctions. Charts suggest investors should proceed with caution. S&P hits its 47th record high of 2024. Netflix jumps. So Netflix reported positive earnings, good for the streamers in general. Dow and S&P hit fresh record highs, lifted by Netflix and tech. S&P Dow closed at record highs. So again, Dow and S&P both hitting new highs, 47th new high for 2024. So again, very bullish. Saw oil break down below 70. Looks like it bottomed in the low 68. So decline in oil. Also pretty precipitous drop in natural gas as well. Dropped down to 225. Gold hit a new all-time high again. So gold just continues to be a beast. Broke 2,700. So got plenty of support at 2,700. Looks like it might try for a 2,750 test. Futures all showing positive on the major indices except for the Russell. We did see Treasury yields perk up during the week, and we'll see that in the futures, although they did retrace slightly on Friday. And Bitcoin had popped up and then retraced a little bit on Friday as well. Also, some of the news on Bitcoin is I guess they approved options on the spot Bitcoin ETFs, probably part of the pop in Bitcoin. Welcome, Gerald Fitz, Douglas PC. Glad to see you all in the chat today. Hope you had a great trading week and are doing well. Douglas, I hope you fared through the recent Hurricane Milton okay. So now we'll look at the major indices and the breakdown of the technology components. Just a quick reminder, you can access these screeners via the links in our notes and also in the screener sheets of our ETFs and Watchlist Google Sheets. Glad to hear that, Douglas. I'm glad you fared through the hurricane well. Yeah, we didn't do too bad either. So if we look at the major indices, again, relatively strong. Dow, continues up above that upper trend line. You've got a upwardly sloping short-term moving average. Again, very bullish on the Dow. Similarly on the S&P, got plenty of support around 560, new all-time highs, very strong upwardly trending trend line, upwardly sloping short-term moving average. Qs does have a upwardly trending short-term moving average, but pretty much flat just above that upper trend line. Looks like that's oscillating around that upper trend line as support. Still hasn't broke the or the late July high. So again, relatively the NASDAQ, the Qs, much weaker than the Dow and S&P. Did have a surge up in the IWM. We saw in the Russell. Did see a retracement in the bond yields a little bit, so it did break that multiple top pivot line, came back, got support. Again, still hasn't tested that pre-August high, so again, relatively is trending up, moving average trending up as well, but the strength definitely in the S&P and Dow at this time. Look at the breakdown of the technology components. So we see ARC did slightly break out of its downwardly trending channel, does have an upwardly trending trend, upwardly sloping moving average, but not nearly as strong as other segments. Bangs also not as strong. So even though we saw that brief rotation back into the Mag 7, it still hasn't retested its previous July highs. Does have an upwardly sloping short-term moving average, but again, not nearly as strong. Same way with the semiconductors, pretty much getting support from this shorter term moving average, resistance from the longer term moving average. So again, relative weakness in semiconductors. Biotechs, again, bouncing between these trend lines, got some support oscillating around its short-term moving average. TQs were essentially the same as the NASDAQ, just leveraged long on the NASDAQ. The broader technology sector also not showing relative strength, got some pretty good support at that 90. This is the leverage long on the broad technology sector. So again, pretty flat, hasn't broke out of the mid-August high, but hasn't tested the pre or the early July high. So again, not relative strength in the overall technology sector. An interesting correlation that I've noticed generally is a lot of times when the FANGs are strong and the other technology sectors are strong, Lab U is negative and vice versa. When FANG U, SOXL, etc. are negative, Lab U is positive. So an interesting correlation that you might be able to make some money trading on if you see that correlation playing out. So I hope that helps. Okay, let me grab a quick drink and we'll go through a breakdown of the sectors, industries, groups, etc. Okay, if we look at a breakdown of the groups or the sectors, see for Friday, basic materials, real estate, communication services. Again, real estate has a strong rebound on the decline in bond yields. Weakest sector, energy, slightly financials, slightly industrials. For the week, again, energy very negative, positive utilities and real estate financials. Again, we had several of the financial companies report positive earnings. Again, retracement of the bond yields, positive for real estate in general. For the month, kind of have a dichotomy between utilities, technology, materials, and financials. and industrials, and the weakest sector was healthcare. Real estate just pretty flat for the month. And utilities, real estate positive for the quarter, and energy negative. So energy negativity mostly on oil, some natural gas. So for the industries, we saw a strong surge in silver and gold, uranium also that continues to trend upward on the nuclear trend. More Mag 7s, more data centers looking at long-term nuclear power options. Again, some of the REITs are going to be positive, positivity in real estate. Weak sectors, coal somewhat negative, going to have oil somewhat negative. That was interesting. Farm products, we see some of the commodities rolling over. And again, oil and gas. For the week, again, silver, gold, uranium, all very positive. Some of the REITs, real estate, negative. Solar, again, the trend was up in bond yields in general. Copper rolled over. And again, a lot of the oil. So again, we saw that breakdown of oil below 70. Semiconductor equipment. So ASML reported poor earnings. So probably attributes to the negativity in that sector. For the month, again, uranium, silver, aluminum, gold, copper, so basic materials, commodities, real estate generally positive, solar very negative, again, very interest rate sensitive, real estate interest rate sensitive again. Welcome, Alan Krantz. Thank you for joining us. Hope you had a great trading week and are doing well. Okay, next we'll briefly talk about the economic data from last week, look at the economic data coming up for next week. Just a quick reminder, as the important economic data comes out or important economic news, try to post that as quickly as possible in the Surf the Markets channel of our Discord. Our Discord is free to join. You can find a free invite to our Discord in the description box below. We'd love to have you join our Discord, participate in discussions on anything related to trading, and also a great way to get the real-time economic news as it comes out, so you can see as economic news comes out, economic data, try to capture that from investing.com, post a screenshot, post the raw data. Also, as important economic news comes out, post that in the Surf the Markets channel of our Discord. So again, we'd love to have you join and participate in our Discord. Great way to get real-time economic data. Just some highlights. This Thursday, we got both jobless claims data and retail sales data. Firstly, the jobless claims data, pretty much as expected. So continuing claims just slightly below expectations. So again, positive for the jobs market. Initial claims as expected. So again, we're not seeing deterioration in the jobs market. 4-week claims up just a little bit. So again, no rapid deterioration in the jobs market, no need for the Fed to cut due to weakness in the jobs market. Core retail sales was much more positive than expectations, so it shows the consumer continues to be relatively strong. Retail sales slightly above expectations. The year-on-year down a little bit, although I think 23 was, probably overly positive. So again, it shows the consumer continued to be strong in September. The economy's doing, okay, and the job market's not deteriorating. So again, no reason for the Fed to need to cut more anytime soon. And I think the probabilities of rate cuts in November decreased significantly after this data, and again spawned the exuberant surge again in the stock markets. Friday was options expiration for October, so we didn't really see a lot of volatility based on that options expiration. Look at the rest of the economic data from last week. Welcome, Fairchild. Thank you for joining us. Hope you're doing well. Had a great trading week. So we've still got Fed officials talking, so they'll be talking about the data coming out, whether they think they need to cut further, and if so, when. Bond auctions, not bad. And more Fed officials. This was interesting. Mortgage rates popped up, and we'll see that causing some weakness in housing starts. So again, bond yields have popped up. So mortgage rates popped up. So that's going to negatively impact the housing market. Crude oil stocks down, although again, we saw deterioration in the oil price towards the end of the week. Talked about jobless claims and retail sales. Capacity, we've got some manufacturing data, a little bit weak. So again, it's showing weakness, slowdown in the front end, the manufacturing end. So the economy is slowly slowing down, but not dramatic weakness causing any significant concerns. Natural gas storage up, but less than expected. And again, we saw a steep decline in natural gas prices the end of the week. Crude oil inventories down. Again, doesn't seem to be affecting the price. I think more turmoil in the Middle East, etc. China demand driving the prices of oil more so than the inventories at this time. Bond auctions, again, not too bad. So we see that deterioration in housing starts and building permits. So again, when mortgage rates go up, it's going to negatively impact the housing market going forward. GDP, Atlanta Fed GDP steady at 3.4. So again, not showing a deterioration in the economy. And the Baker Hughes pretty steady, one up on the oil rigs, one down on total rigs. So not a lot of change in the supply there either. Welcome, Walter Lyons. Thank you for joining us. Hope you're doing well. Look at the economic data from for next week. Not really a whole lot of critical economic data. Again, we've got Fed officials continuing to talk. We'll hear what they think about the recent economic data relative to future rate cuts. Again, we get mortgage rates, see if mortgage rates come down any based on the retreat in bond yields a little bit. Get home sales. Beige book, Fed notes, but I don't think that will impact things a whole lot. Again, building permits, jobless claims on Thursday, new home sales. And then Friday, we do get Michigan consumer sentiment. That might have some impact if the consumer is still seeing inflation, near 3% or 3% going forward. That would be a negative in terms of the Fed cutting anytime soon as well. Also, this may have some prescience towards the election. How is the consumer feeling? Consumers not feeling too good. They might be looking for a change in the administration. So I think Michigan sentiment might be important on Friday. Again, Baker Hughes rates. Also, we're right in the middle of earnings. We have tons of earnings coming up next week. You can see the whole earnings calendar here in investing.com. Again, very lengthy. So see, we've got next week, SAP, Nucor, tons of earnings. I believe Tesla's on Wednesday. I'm not sure. We've got some regional banks, etc. So it's important to know who's reporting, what sectors are reporting, how that might impact your trade decisions, any of your current trading positions. There's L'Oreal, Consumer, GE, Danaher, etc., Philip Morris. Verizon, TI, Texas Instruments, so more semiconductors, RTX, Defense, Lockheed Martin Defense, Freeport, Copper, GM, Autos. So again, tons of earnings, a variety of sectors. So you can go through that whole list in investing.com, and I'll show you how you can see a near-term list also in Webull. Just a quick reminder, you can hear how we trade around earnings, why it's important, not only their reported earnings, but their guidance going forward. Also for some companies, their AI spend and whether they're making a profit on AI will be significant. So again, you can hear how we make money trading when earnings matter again, and earnings definitely matter again via the link to that video in our notes. And our theme for this week is making money trading in October of a presidential election. Election's November 5th. Right after that, we've got the next FOMC meeting. But again, we don't get a dot plot, another SEP in November. So we'll see how this economic data impacts the probability if the Fed's going to cut it all in November. So let me grab a quick drink and we'll look at the market screen in Webull. Just a quick reminder, if you're not already using Webull, they're still offering 75 free fractional shares of stock, and that's still bonus 2% interest for 30 days for a total of 6.25 interest on your uninvested cash in Webull. If you deposit 25K or more, you get the 75 free fractional shares, the 6.25 interest. Less than 25K, you get 20 free fractional shares, still get that bonus interest. And those fractional shares are worth $3,000 to $3,000. Again, we had seen yields drop a little bit, so that interest rate is going down. Money market rates are dropping. They're about 4.5, 4.6. So this is actually significantly better than money markets right now. So if you're not already using Webull, if you join now with our affiliate link in the description box below, you can get all of these current promotions, lock in your bonus interest rate, and also help support our BeachBum trading community, which we greatly appreciate. Here's the market screen in Webull. You'll see they made several new enhancements in the desktop version. This is the desktop version, or not the desktop version, the online web-based version of Webull. I'll go over some of those recent enhancements briefly today, and hopefully in more detail in some future videos. So firstly, if we look at the advancers decliners histogram, see pretty balanced, 34,000 advancers, 28 decliners. Also the percentages, again, very balanced. So even though we hit new all-time highs, so again, pretty balanced histogram. This inflow is interesting. We saw this strong change in inflow in the NYSE right around 11 o'clock. I don't recall offhand what happened at 11 o'clock, if anything. Maybe it was just them going to lunch. But we see that strong surge in inflow in the NYSE right at 11. A bit of a drop in the NASDAQ inflow at 11. So switch, generally flat through the day. And then the NASDAQ dropped off, but again, still positive at the end of the day. So again, overall positive. We look at the treasuries as well. See the 1-year drop just slightly, 2-year up a little bit, 10-year up a little bit. So we've still got the inversion between the ones and twos, but not between the ones and tens or the twos and tens. So not a lot of change in the Treasury yields on Friday. So one of the new features, or a couple of the new features they've added in the online browser version of Webull. The first is a market sentiment widget. So we can see currently the market sentiment is pretty neutral. We can also see previously it was neutral. The previous month it was greedy, and currently it's pretty neutral. You can also see a graph of the history. So we can see we're not in any kind of extreme greed sector, even though we're sitting near all-time highs in the Dow and S&P. Again, it's not showing extreme greed, not a lot of fear, pretty neutral in general, so not overly exuberant, even though we're seeing new all-time highs. Some other new enhancements in the market screen in Webull is to the calendar widget. So now they've got a breakdown by day, so we can see earnings. We want to bounce that to showing the current earnings for the current day. We want to look at next week. We can hit the little calendar, go to next week. So then you can go day by day. So again, Monday we can see SAP, Nucor, etc. So great way you can see the near-term earnings. You see forecast, market cap, etc. As they report, the actuals will show up. So again, now you can go day by day, see who's reporting earnings, keep track of those in the calendar section at Webull. They've also got dividends. So you can see who's going ex-dividend on each day, if there's any splits. Also, now they've got economic data. So if you want to see the economic data coming out on Monday, what time, etc., and also any economic events, so world leaders, IMF, UK. Also, you can see what country they're in, what time, etc. So again, a number of new enhancements in the market screen in Webull. We hope that helps. Also, they moved the news section down here. You can move these widgets around, I believe. Again, maybe we'll do some more detailed investigation and further videos on these enhancements in Webull in the near future. Let's look at the best performing industries for the week. So again, uranium been very strong, financials, transports, banking, construction relatively strong, construction, biotech quite positive. There's one of these crazy runners. Utilities relatively strong. Natural gas utilities, all the utilities, water utilities. Healthcare somewhat strong. Look at the ETFs. TQQ, so up on the NASDAQ, up on the Dow, up on the S&P, up on the NASDAQ, Bitcoin long, short on the VIX. And we'll see the VIX was up and it steeply declined at the end of the week. So that's short on the Russell, short on small caps, so negative on the Russell. So positive on industrials, healthcare, pretty split on financials. Again, utilities and strong, energy very negative, real estate positive, basic materials, technology positive, cyclicals and defensives kind of split. Commodities, silver strong. We'll see this exuberant pop in silver. probably a gold. Okay, so now next we'll look at the futures and FinViz. Just a quick reminder, you can also now trade futures in Webull. You can see their previous offer and some discussion of how you can trade futures in Webull via the discussion topic in our Discord. Okay, so if we look at the futures in FinViz, see again, strong Dow, strong S&P, making new all-time highs, definite trending upward, NASDAQ trending upward, but again, if we saw this a minute ago in the detailed chart, again, not up to its August highs yet. Again, Russell also just briefly broke out of that July high, or September. It hasn't quite made the August high. Looks pretty flat at this point. Nikkei rolling over, Euro stocks down and then bounce, DAX kind of trending upward. We talked about that breakdown in oil. You see it broke down below 70, trending down. We'll see if that trend continues. I'd love to see if it would test one of these low spikes. If so, I plan to pick up a big chunk of USOI. We've talked about that as a monthly dividend paying ETN on oil. So I'm closely watching that for a bottom. If it tests, I think this bottom's like 65.27 or so. I've got a price alert set there. So again, closely watching that decline in oil for an opportunity to get back into USOI. Again, we saw the VIX steeply decline towards the end of the week. I do want to look at the VIX term structure. So again, just a quick reminder, you can see this VIX term structure tool in the reference links under the links section on our homepage, beachbumtrade.com. Here's the VIX term structure. So the VIX itself had been higher than and again, we got this expiration of the October contracts rolled to the November contracts, and the VIX had been higher than the VIX futures. And then now we see it steeply decline, just sitting just above 18. We can see the December futures contracts is below 18. Also, the future months into next year steepen quite a bit. So that's interesting. So apparently there's more fear going forward into next year, but very little in December. Also, the November contract, is now below 20. So the overall fear did decline. Again, the VIX dropped pretty precipitously that we saw in the futures. While I'm here, I also wanted to show you, in addition to our reference links section under the links on our homepage, that I added a reference to world stock market hours. So we've seen a lot of volatility in China and some opportunities to take advantage of that. So I wanted to see when the Chinese markets closed, if they closed before the 4 a.m. pre-market open, like in Webull. So an opportunity, a way to take advantage of that volatility in China and the other foreign markets, possibly is getting into whatever direction prior to the opening of the US market. So you can find the local hours of operation, also the UTC hours and the Eastern time hours for the foreign markets. So we see Eastern time So we see South America, Europe, etc. And here's the Asian market. So Hong Kong in Eastern time closes at 4 a.m. So China, there's the Shanghai close at 3 a.m. So again, there's an opportunity if you use the market screen in Webull, like we've talked about in the past. Look at the global markets prior to the 4 a.m. open. If the Chinese markets are up, you might want to go yen or one of the long China ETFs. If they're red, you might want to go short yang Chinese markets. So again, just another tool where you can see where the foreign markets open, close, and possibly take advantage of those via the link again, the world market hours in the reference section under our reference links on our homepage. So I hope that helps. So back to the futures, can we see this precipitous drop in natural gas sitting about 225? So again, we'll see if it continues down, tests, that 2 area or below. So if it continues down to that support, to a support area, swings back up, I would be looking for a long position, another long position, swinging using Boyle. Again, very volatile, so be careful. Can we see that gold surged up, broke through 2,700, made a new all-time high. Looks like it's got, very good strength, probably test 2,750, possibly even higher. So again, we've got a number of long gold ETFs we can look at. Again, a very strong surge up in silver. So finally broke the 32, surged up to 33.93. Look at the silver chart longer term as well. So we can see probably some resistance right in the 35 area, and then the recent high is about 50. So if you're looking to either short that exuberant surge in silver, or when it does approach that 35 resistance, and we've got the ZSL ETF in our ETF Google Sheet. So you could use that. We may have some other short ETFs and for silver in our ETF Google Sheet. We've got plenty of longs. The leverage long is AGQ. And copper kind of downtrended and bottomed. Platinum up, palladium up. Saw rollover in a number of the ag products, corn, wheat looks like it's trending down, broke below that 580 support level. Probably go retest at mid 560 level. So we'll see if it continues down. If so, we can trade another swing on wheat with the wheat WEAT ETF. And some of these others, we don't have short ETFs, but you can, or you can short the ETF. So there is a corn ETF. And if you want to directly short that, you can short that ETF, but we don't have a specific ETF to short some of these commodities. Again, the bonds saw that precipitous drop in price and a quick bounce up on some of the economic data, and then a retracement again on the strong employment data, strong retail sales data. These areas all look like they're very close to a support. So if you want to trade, a swing back up, we have a number of ETFs in our ETF Google Sheet that you can trade different time periods of bonds. So it does look like these are all pretty good support areas. So I would expect probably a stabilization and or a swing back up. In my humble opinion, I think the bond market has been overshooting on both ends. So we got an overshoot, drop down in bond yields, pop up in price. And then I think we got an overshoot on the downside. We saw the 10-year or whatever's 30 years like at 4.3 or something, a bit high. We do know the Fed's going to eventually cut rates further. We just don't know when and at what rate. So again, my humble opinion, not financial advice. None of our content should be considered financial advice. All of our content's for education and entertainment purposes only. But again, my humble opinion, I think the bond market is saying it doesn't believe that the Fed's going to cut further, believes there's more instability in the economy. And again, my humble opinion is kind of overshooting on both directions. Again, we saw the dollar strengthen significantly, pop back up over 103, hasn't tested that previous top in the 104s. Looks like it might have rolled over. Obviously, that puts downward pressure on the foreign currencies, euro, CAD, not so much the pound. Yen's been slowly just kind of bleeding out. Again, waiting for further rate hikes by the Bank of Japan. So I hope that all helps. Okay, I want to skip forward and we'll come back to ETFs if we have time, but I want to skip forward to our strategy section for this week. Let me grab a drink and we'll talk about making money trading in October of our presidential year. Okay, again, our theme for this week is how to make money trading in October of our presidential election year. This came from a question from one of our BeachBum traders. It may have been MD or someone can remind me who asked this question last week. But our theme, for the past couple of weeks is how to make money trading in October, in the fall, etc. And one of our BeachBum traders asked specifically, how do the markets perform in October of a presidential election year? So I asked ChatGPT that question, how do the stock markets perform in October of a presidential election year? And we'll go over the answer. So I put the link to the answer in the notes document. So hopefully you can reference that and go over this answer in a little more detail. See if I can zoom it up a little bit. So again, how do the stock markets perform in October of election year? So it says historically, October in election year has been known for heightened volatility. Performance can vary significantly, but here's a few general trends and factors. So again, themes: increased volatility due to uncertainty around the election. Markets tend to react to the uncertainty, which candidate will win. Different policies, economic strategies can lead to significant market swings. Unexpected events, you'll hear them talk about October surprises. So someone comes out with something that's overly negative about one candidate or the other, that might significantly impact it, as they're noting the FBI announcement regarding Hillary Clinton emails caused a stir late in the month in the market. Again, polls, so polling data has the candidates, who's going to win, oscillates up and down. That may impact the markets. If a candidate favors certain industries, so as the probability one candidate or the other is going to win, that might impact those sectors. Also the party. Historically, the market preferred a particular party over the other. So as those polls oscillate, that may impact the markets as well. The incumbent advantage, so according to market analysis, and the incumbent party appears likely to win, market may remain relatively stable. Conversely, if it looks like the other party is going to win, might increase volatility. So again, as those probabilities oscillate, it may increase or decrease volatility. Historical data suggests that third and fourth years of presidential term are good for the markets. October, an election year, might reflect those broader trends. If the markets expect a favorable candidate to win, so again, the year of presidential election years tend to be positive. Again, the incumbents definitely wants to do everything to make sure the markets don't negative crash, etc., as that would hinder their chances of getting reelected. There's several historical examples of October, and I'll let you read those specific examples. Then we've also got the October effect, and we've talked about the October effect. We've got videos about the October effect. Some of the most significant market crashes occur in October. So the anticipation of volatility, especially during an election year when uncertainty is already high. So again, we've got a number of factors for potential increases in volatility. Although we saw, the VIX had definitely dropped back down below 20. So right now, there's not a lot of volatility. So this might cause a significant spike if any of these changes occur. So in summary, October and election year can see heightened volatility as markets react to polling data, potential policy change, unexpected events. Actual performance may vary. So again, I hope that all helps, and I hope that answers the question as to how do the stock markets perform in October or presidential election year. Maybe next week or so we can look at how the month of November occurs after the presidential election. So again, whoever asked that question, please let me know if that answers it. Also, I asked ChatGPT and a script for a short video I hope to come out on this topic in the near future. And part of that answer was since 1952, there's been only one instance where the stock market ended negative for the month of October during the presidential election year. So again, the probability is very high that October will be positive. Again, we've seen in our previous discussions on October and the stock market performance, October tends to be positive. Even if we have one of these, crash events, it tends to bounce back very quickly. I do have another video where it talks about making money trading election years, and there's several references in the description box of that video to articles that will give you more information about trading the various years of the election cycle, and also more information about trading during a presidential election year. Also wanted to mention some my ideas, some Trump trades and Harris trades. That might be positive or negative depending on who looks more probable to win at any given point. So you can take advantage of those swings. So again, we have ETFs, etc., that you can long or short these trade ideas. And if we have time, we'll take a look at some of those. But some of my ideas relative to Trump trades is be positive for oil and natural gas, particularly exploration, services, pipelines, possibly not so much as the spot price, as again, you get more supply. But again, some companies that may be positive for us, things like Exxon, Schlumberger, Halliburton, they provide exploration and services. Also, he's trying to position himself as the crypto candidate, so it has tended to be positive for Bitcoin, cryptocurrencies. So again, that may be a positive. Negatives is companies with significant exposure to tariffs. So he's talking about slapping tariffs, particularly on things in China, things in Europe. So companies that will be negatively impacted by those tariffs could be any company importing from particularly China or Europe. Also, you could get retaliation. So if a company does a significant amount of business in China or Europe, if they retaliate and slap tariffs on those products, that could negatively impact that company's sales. So again, it's important to understand their exposure. Also, if they import a lot of parts, etc., produced in these companies, that may increase the price of their product. So again, there's a lot of different ways that these tariffs can negatively impact a company. So in my humble opinion, it's important to think about what the impact of these tariffs would be on any positions you hold, any positions you're looking to trade, if it looks like Trump may win. Now, on the other side, if Harris is positive, winning in the polls, wins, etc., might be positive for cannabis. Again, they've tried to position themselves as more the pro-cannabis party, be positive for clean energy like solar, etc. Also EVs, they've had a lot of tax credits for EVs. So again, that might be positive for those sectors. In my humble opinion, I think it would be negative for pharmaceuticals, drug manufacturers, and biotechs as they have been putting price caps for Medicaid, etc., on the price that pharmaceutical companies can charge. And if the profit margins of pharmaceutical companies get squeezed, they're not going to be out buying, biotechs for billions of dollars, etc., and also would cap their potential profit from future drugs. So again, I think it would be negative for pharmaceuticals in general. I'd love to hear anybody else's ideas of what you think other sectors, industries, themes may be positive or negative based on, Trump trades or Harris trades. So again, put your ideas in the description box below, in our Discord, etc. So again, I don't like to be political, try to avoid being political, but specifically around trades that you think would be positive or negative for one candidate or another based on polling. And then once we know what the results of the election are, um, how we can trade and make money trading, both in October and going forward after the presidential election. So okay, so it was Ricky Khan that asked that question. So thank you again, Ricky. That was a good question. And I hope that answers the question. Again, we've also been talking about making money trading in October in general, so you can reference those discussions via the videos and the links, also the trends for the fall. So we also have links to those. So let me very quickly go back to ETFs. Probably I've got a number of additions to our research sheet, our ETFs research sheet. I think I'll defer those discussions probably to next week. You can see the risk reward profiles for all of these additions in the research sheet of our ETFs Google Sheet. And as we identify a trade idea, a theme, a trend in the markets, and we can jump over to our ETFs Google Sheet, identify specific ETFs to trade that trade idea, whether it be long or short. And you can do likewise, get access to our ETFs Google Sheet 24/7 by joining our Patreon. Let me grab a drink, and if anyone in the chat has a particular category, topic, index, theme you want to look at, we can do that briefly. Okay, just some of the ETFs related to some of the categories that we talked about with either Trump trades or Harris trades. So we've got cannabis long. So again, as a Harris trade, if you're looking to long cannabis, we've got MJ, MSOS, MSOX, Bitcoin. We've got a number on Bitcoin. Also, you'll find additional ones on Bitcoin and also cryptocurrencies in the research tab. In biotechnology. So if you're shorting, biotechnology on a Harris trade, Lab D is the short, Lab U is the long. So you think Trump might be positive or more positive. Lab U, energy in general. We've got a number of long or shorts on energy. We talked about gold. So again, we've got a number of long, short gold, GDXU long, etc. So healthcare. So here's oil. So again, part of the Trump trade, if you think oil will bounce, and it's important to know the constituency of these ETFs, whether it's based on the oil price or oil miners, so or oil producers. So I believe Gush is based on oil, Gush long, oil or drip short are based on oil producers. So again, important to know the constituency of those and pick the one with the constituency and risk reward profile that you like. Natural gas, again, long oil or UNL or UNG, short cold. Someone, Alan or someone also mentioned some of the foreign countries that might be negatively impacted by tariffs. So Mexico, we have a long on Mexico, China. We have a number of long and shorts on China. So again, as the threat of tariffs, how that might negatively impact some of the foreign countries, Europe, the Europe stock market. So the stock markets in general. So we've got long and short on the various indices. Also, we talked about solar. So TAN, I've been taking a look at. It's pretty close to its 52-week low. Doesn't have a great 52-week risk reward. Does have a nice longer term risk reward. So I've been taking a look at that. But again, it's been very negative recently. So if you think Harris might win and might benefit the solar industry, also if interest rates decline, that would be positive for the solar industry. Again, TAN, a more popular ETF than RAISE, but RAISE is another alternative to long solar. And we've got a number of long and shorts on bonds. So again, if you think the bond curve is going to rebound, you can trade the yield or the price. Most of these are based on price, and we have different durations. So again, if you think we're going to get a recovery in like the 20-year longer, TMF is a leveraged long, TLT is just the straight long on the 20 plus. Uranium, again, been very strong, very close to its 52-week high. Talked about silver. Again, silver broke out. So we've got a couple, just ZSL is the only short I have. Had a recovery on the miners. They're pretty high. Got some again on some other foreign countries. Can volatility drop? So if as we saw in those articles, ChatGPT's response, expecting a bounce in volatility, play long, leverage long and volatility, UVXY, VXX, or once it peaks, catch the short with SVXY, SVIX, or SVOL is a monthly dividend payer. We looked at Japan, yen, Wheat slowly coming down. Little Hamster One, thank you for joining us. Hope you had a great trading week and are doing well. So just wrapping up, if anyone else has a last minute ETF you want to look at, please throw that up in the chat. Again, I have a number of ones I've added to the research sheet based on suggestions from Easy Mike, some other videos I've seen, some others I've found, and I'll try to cover those in more detail either tomorrow or next week, etc. But you can find each of these. Just do a find in the research tab of our ETFs Google Sheet, and you can see the risk reward profiles, investigate those, and see if those would be of interest to you in the research tab in our ETFs Google Sheet. And again, we'll talk about those and decompose them in more detail in the future. And I did point out, and I put in the Q&A section, again, another reference to that World Stock Market Hours, talked about how that may benefit you, take advantage of some of the foreign markets, and position accordingly based on when they've closed, and also using the market screen in Webull. So I hope that you all like this content. Please smash the like button. Help us try to get the YouTube algorithm to show us some love. Share our content with other traders. We really do need your help to build our community by directly sharing our content, reposting our content on your social media sites. Help us continue to build the BeachBum trading community. If you have any other questions, recommendations for improving our weekly trading game plans, or any of our tools, resources, Google Sheets, our community, etc., please post those in a comment to any of our videos or in our Discord. Again, our Discord's got plenty of channels on different trading styles, different asset classes. Love to have you join and actively participate in our Discord. Again, we're BeachBum Trading, all lowercase, no other characters, numbers, etc. Please tag us in the Discord with any suggestions, questions, comments, etc. We also have a suggestion box, so you can put them directly in the suggestion box channel in our Discord. So again, we need your feedback as to what we can do to continue to improve, grow our community, add more value for all of our fellow BeachBum traders. So again, thank you to everyone that's joined us in the chat today, everyone watching after the fact. We hope you'll come back tomorrow for part 2 of our weekly trading game plan. We'll take all of this market analysis, trade strategies, trade ideas, and we'll be selecting our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. Also talk about how we can use dividend payers and several income strategies to also generate income while we wait for our swing trading stocks to set up. So again, we hope to see you back tomorrow, 10 a.m. on Sundays for part 2 of our weekly trading game plan for the trading week of October 21st through October 25th. And until then, have a great day. Thank you again.